Welcome back, ladies and gentlemen, to Fortitude Gold's channel, a dividend-creating gold producer, mining-friendly Nevada. We always have the pleasure to be joined by Chief Executive Officer Jason Reed. Welcome back, sir.
Hey, thanks, Kyle. Thanks for having me.
Always a pleasure. You guys have dropped a lot of news, whether it's the most recent intercepts that you continue to explore or just the financial results that you dropped. So to kind of highlight the most prevalent, first and foremost, for that second quarter gold production, you're sitting at 10,980 ounces, leading to about 24 million in sales. Can you kind of just highlight that and exactly what's going on there?
Sure. Yeah, basically that puts us very much on track for our annual outlook of 40,000 ounces. And that's where we want to be. So we're right there, which is great. What's also great is we're all-in sustaining costs of about $733. So that is excellent on the cost side of things. And now we're sitting in a really strong position. We did a lot this last quarter. We had over 2 million in exploration, 2.9 million in dividends, and we added cash to our bank account. Now we're back to almost 41 million. So we fired on all cylinders on the financial side of things, and it just speaks to what a great deposit the Isabella Pearl is.
Yeah, it's absolutely incredible. Just kind of highlighting a lot of those facts and just kind of moving forward here. I wouldn't mind kind of briefing on some of this news because you recently intercepted 3.05 meters of 16.8 grams per ton of gold within 12.9 meters, grading 4.86 grams per ton of gold. These are really high gradings. I think it's kind of prevalent to just kind of iterate that from a lot of the gold producers. Can you kind of give some insight there on exactly what you're finding on the ground and how you're expanding into the coming months?
Sure. This is all the Golden Mile, and this is the next project we target to put into production. So we're marching it forward at a very fast pace for the industry. Most, I would say, mining companies would probably take 5 years or more to drill this whole thing out before moving forward. We're not going to take that approach. What we're trying to do is define the first phase pit shell and the first amount of ore that we can recover from this and move forward with that. And we know, and I showed some graphics on the conference call webcast that shows all this mineral outside of the pit shell that we're not going to be able to pull into a phase two till we take a lot of time to drill it out. But coming back to the specific drill results that you just mentioned, what's great about that is these are on the margins of the first phase pit shell. And so when we're seeing this, we want this in the first phase. So we're actually pushing back the cutoff date for drill results to be included in the pre-feasibility study so that they can be included. We also have some other holes in the queue coming in, and these absolutely warrant follow-up holes. So we're still targeting by the end of this year to come out with a pre-feasibility. It may push into early next year, but all of that is okay. I mean, this is more important that we get the first phase one. But again, on the graphic that I showed, and it'll be on the website presentation soon as well, there is tremendous upside in not only on strike, but at depth at the Golden Mile. So it's great that, we're looking to start generating revenue, keep expanding the drill programs there, and hopefully grow this into a fairly sizable, hopefully, deposit. But we want to get moving, and that's what we're doing. So we're purchased or signed contracts for almost all the capital expenditures for the equipment that we can, so that we can fight these inflationary pressures that we're feeling. And we're marching the permit process forward with the BLM. We just finished the first water well hole, and early indications are pointing that it may be about 200 gallons a minute. Well, that should be enough and sufficient to feed this operation. So we won't know until we do the testing on the water well for sure, but it was great. So thus far, looking at it. So yeah, it was an excellent quarter. We're having a blast. I know that generally speaking, the market's tough. The miners have been beaten up pretty bad. We're hanging in there pretty well. But on balance, we're doing what we need to do, and we're having a lot of fun doing it.
Yeah, that's incredible to hear. And considering we've seen gold kind of start rallying back up to that $1,800 mark, do you have anything you'd want to comment? I mean, obviously these times are really tumultuous. It's leading to a lot of intriguing conclusions that investors have, but the long-term mindset seems to be really working out for you guys from these results. You're all in sustaining costs. What would you tell those people?
Yeah, look, you're either, have an affinity or some reason to get into the gold space. And so when you step back, if you're one of those investors, you step back and you look, okay, where am I going to go? What am I going to do? Where am I going to invest? We provide a yield that's pushing 8%. So you effectively get paid to wait and watch us execute. And that's pretty rare to have an 8% yield. And I think it's 8% just as a function of the metal got so beaten up. You mentioned it's risen recently, and that's great, but prior it got pretty badly beaten. So, I think as more people realize the overall financial markets, et cetera, are cracking, I think more people are going to come into gold, and they're going to look around and they're going to say, okay, what are my options? I think Fortitude Gold is one of the best options out there for gold exposure. You get paid along the way as well.
On that note, I'm going to pass the question off to the viewers. We'd love to know what you guys think about all of this in that comment section below. Consider subscribing because, again, as news comes down the wire, of course, we'll update you here. But on that, stay cool, stay awesome. And as always, we look forward to catching you in the next one.